Good morning. I'm Christy Duffy for SmarTrend News. Today is Friday, August 20th, and this is your opening bell market update. After yesterday's 1.7% decline in the S&P 500, U.S. equity futures are continuing that negative momentum and trading lower Friday morning. Japan's Nikkei fell almost 2% overnight, and European markets are trading over 1% to the downside. With no economic data on the calendar today, investors will continue to debate the odds of a double-dip recession after yesterday's disappointing Philadelphia Fed and jobs report. Yesterday after the close, Dell reported earnings of 32 cents per share, topping estimates of 30 cents, and Hewlett-Packard, in its first report since Mark Hurd's salacious departure, posted fiscal third-quarter earnings of $1.08. Shares of both companies are trading lower pre-market. Futures on the Dow Jones Industrial Average are trading almost 70 points below fair value. S&P futures trading 8.5 points below fair value, and the Nasdaq trading 13 points below fair value. Now, for more perspective on what's happening in the markets today, let's turn it to Andy Zamfotis from Legard Capital. Good morning, Andy.
Morning. Well, yesterday I mentioned how the market should generally trade sideways as we go into an options expiration Friday, but that was unless we got a negative surprise. Unfortunately, that's what happened. First, we had initial jobless claims. That posted a 5 handles, the first time we've seen them that elevated in quite some time. And then Philly Fed was a complete disaster. Economists were looking for a positive 7, came in at negative 7. I think those two data points broke the bulls back, and so we saw the Dow take a big tumble. Today, a lot quieter on the news front. We did have some earnings last night. We saw Dell post a better than expected earnings. However, gross margins were a bit on the lighter side, and so those shares are down pre-market. Although Salesforce.com, Marvell, and Intuit, 3 big tech names, they posted better than expected earnings, and those shares are up. Corporate profits by and large have been pretty positive. I think somewhere in the order of 75 or 80% of the S&P bested their earnings expectations, and that's where we're seeing this difference. We're seeing corporate America do quite well these past few months, but just today, more evidence that Main Street is feeling some hardship. Fidelity said that 401k plans that they manage, they're seeing an increase in the level of loans that are taken against them, as well as hardship withdrawals. So I think that's where we're seeing this divergence. In terms of the S&P, yesterday we saw 1070 hold as support. We're going to see if we can retest that this morning as we look to gap a bit down. Below that, the next support is around the 1050, 1055 level. I mentioned we have options expiration today, so that can always throw a wrinkle as we get towards the close, so we'll keep an eye on that.
Thanks, Andy. I'm Christy Duffy for SmarTrend News. For more news and market analysis, make sure to subscribe to our YouTube channel. That's Trade the Trend. Also visit our website, tradethetrend.com, for more headlines.
Trade the Trend with a free 14-day trial from SmarTrend, the equity trend alert system that helps you discover the right stocks at the right time. SmarTrend takes the guesswork and emotions out of investing and gives you real-time unique indicators of stocks on the move. SmarTrend uses a proprietary system developed by financial market and computer systems experts. Now is the time to get smart with your investments. Sign up for a free 14-day trial. Visit tradethetrend.com/TV to sign up now.